The National Drug Law Enforcement Agency, NDLEA, has intercepted a United Kingdom-bound cocaine shipment and arrested a businessman in connection with the consignment. Also, the Dangote Petroleum Refinery has blamed petrol importers for its decision to reverse its dollar-dominated sales policy and return to naira transactions. On the international market, oil prices have plunged following a pause in United States strike on Iran, while investors continue to monitor geopolitical developments and their impact on global energies. And also, demand for safe haven assets is rising as easing market risk reshape investors' sentiments. Now, the news in full. The National Drug Law Enforcement Agency, NDLEA, says it has arrested a 55-year-old Lagos businessman over an alleged attempt to export 3.30 kilograms of cocaine to the United Kingdom. The agency says the cocaine was concealed inside the walls of cartons used to package food items and was intercepted at the export shed of the Murtala Mohammed International Airport in Lagos. The businessman, identified as Onibu Ndubisi Chinedu, reportedly deals in clothing at Balogun Market on the Lagos Island. According to the NDLEA, the investigation also led to the arrest of 3 cargo agents and another suspect who allegedly delivered the consignment for shipment. The agency says further investigations are going on. Also, the Dangote Petroleum Refinery says it returned to selling petrol in naira after alleged attempts by importers to hold back their stocks in anticipation of higher prices. A refinery management official who spoke anonymously said the decision was taken in the interest of preventing fuel scarcity and further increases in petrol prices. The refinery has briefly moved to dollar-dominated sales for some transactions before reverting to naira payments. The development comes amid continued concerns over petrol supply, pricing, and the impact of crude oil availability on domestic refining. Industry watchers said the latest policy reversal could have implications for competitions between local refining and imported petroleum products. And global oil prices have fallen by more than 5% following the United States' decision to pause strike on Iran, raising hopes of diplomatic effort to de-escalate tensions in the Middle East. Brent crude futures fell to around $91 per barrel, while U.S. West Texas Intermediate traded around $48 a barrel. The decline comes as investors reassess the risk of prolonged disruptions of oil supplies and shipping through the strategically important Strait of Hormuz. The development is also easing some concerns about a prolonged energy price shock that could fuel inflation and put additional pressure on central banks. However, markets remain cautious as the geopolitical situation is still fluid. And investors are continuing to reposition their portfolios as geopolitical risk shows signs of easing. The pause in U.S. strikes on Iran has helped reduce fear of wider regional escalation, triggering a decline in oil prices and easing some pressure on global markets. At the same time, investors remain focused on traditional safe haven assets as uncertainty persists. Market analysts say gold, the US dollar, and the government bonds remain closely watched as investors balance the possibility of further de-escalation against the risk of renewed geopolitical tensions. For Nigerian investors, development in global oil prices remain particularly important given the country's dependency on crude oil revenues and the impact of international energy markets on foreign exchange and government finances. That's the latest from the business desk. Stay with us for more updates on the markets.